All right, guys, Jay Bond here, Bond Real Estate Group, and it is that time of the month again, your market snapshot update for San Luis Obispo County. So today we're going to go over a few things. One, rise in interest rates. How is that impacting consumers? How is that impacting buyer behavior as well as seller behavior in the market that we're in, and what to expect future pacing moving forward as the months go on through 2022. Now I have my trusty hot sheet here with me with my sales data and numbers. We're going to be looking at sales overall for the county as well as sales in individual cities throughout the county, and of course what trends we are seeing. So let me go through these numbers here real quick. So single family residence sales, SFR sales, 308 units sold this last month in March, right? Which is quite a bit. 85 condo unit sales to take place, and we're looking at a countywide overall increase by about 1.5% year over year change. And again, that's March of last year to March of this year, 2022. Looking at the individual city data, Arroyo Grande, 29 SFR units to sell, single family residence units to sell, an increase of about 22% year over year. All right, Atascadero, 28 units to sell for a decrease of about 1.6%. Avila Beach, 0 units for a minus 12.5%. Cambria, 13 units to sell, positive 15.5%. Cayugas, 9 units, positive 10.3%. Grover Beach, 11 units, down by about 14%. Los Osos, 12 units to sell, minus 3.4%. Morro Bay, 11 units to sell, minus 1.6%. Nipomo, 20 units to sell, minus 5.7%. Oceano, 4 units, down by about 16%. Paso, 69 units to sell, a lot of units, and down over 1.5%. Pismo Beach, 10 units, minus 13%. Slow proper between the two zips. San Luis Obispo, the city itself, about 41, 42 units sold, it looks like, for about 18, almost 19% increase. Santa Margarita, only 1 unit, 2.7%. Templeton, 10 units to sell for a positive 9%. So what does this data mean? How are we interpreting this, and what can we expect, moving forward in the marketplace right now? Well, as I've said over the last, 6, 7, 8 months, a big saving grace, if you will, for property owners, for sellers, of course, is, there's been little inventory, which has kept demand high, right? But we are seeing a pretty dramatic shift in consumer behavior. With the rates going up, we did see a big push, which, historically you see that when the rates are on the rise, you'll get that last hoorah from buyers who want to get in before things start taking a turn to try to secure a property or secure a purchase for themselves before rates continue to rise. After that, you start to see kind of a tapering off effect where they start to cool off. And we're seeing it with our own listings and properties where, yes, we're getting fewer offers than we were 6, 7, 8 months ago. And those buyers, honestly, making those offers are far less aggressive. Other cities in the state of California might be experiencing, different impact. They might still be seeing the crazy demand and the rise. But for us, we're seeing the opposite. We're seeing buyers cool off as rates rise and buyer activity start to mellow out a little bit. And what is that going to mean for sellers? Well, don't be as overzealous with your asking price as you were 8 months ago. Be more realistic. You're going to see buyers, again, not being as aggressive. Instead of getting 10 or 12 offers on a property, you might be getting 2 or 3. And they might not be willing to bid up much more than that right now, right? Just because money is more expensive to borrow. So what is the long tail impact of that? Well, eventually we're going to start seeing buyers continue to cool off and draw more sellers out of the woodwork, right? So we're going to start seeing more inventory over the next 12 or 24 months as well. In doing so, we're going to see buyer-consumer behavior change. Because what happens when buyers have more options? It creates indecision, right? They start not being able to make decisions. Oh gosh, I like this home, but I want to see the 6 other homes that are on the market today because I just can't make a decision, right? Very different from the behavior we've seen over the last 24 months or so, or longer now, almost 30 months, of buyers going crazy and chomping at the bit to get at that one property because there's not many other options on the marketplace right now, right? It's that scarcity and the supply and demand factor playing a role in things. So those are the changes that we're going to be seeing here, guys. And so, what does that do, overall for for buyers, for sellers? What advice and tips, can we give them? As far as buyers are concerned, hey, don't be super impacted by inflation, right? I was talking about this at a conference we held yesterday, actually. People are like, we're hearing this a lot, oh, I don't want to buy right now, inflation, this and that. Well, the reality is we all know rapid inflation is taking place and it's probably going to continue for a while. And what does that mean? It means that it takes, not that things are getting more expensive per se, it just means that the value of your dollar is down, and so it takes more dollars to buy the same thing that you bought for less dollars a year ago or 6 months ago, whatever it may be. So the value of your dollar is going down. It takes more dollars to buy the same thing that you were buying previous. And so long story short is guys, hey, don't sit on your cash because it's just going to be worth less this time next year. Park it in a more tangible asset like real estate, something that is always going to appreciate in value over time. And even if it dips down 5 or 10 or even, heck, let's say 20%, if the market does correct and just drop and crazy go down, it will eventually over time recoup and rebound, right? Your dollars aren't necessarily going to do that because why? Hey, they can print more money, but you can't print more real estate. Am I right? So those are things to think about. As far as sellers are concerned, hey, I know a big concern for a lot of sellers over the last 2 years is I don't want to sell because I don't know where the heck we're going to move. Where are we going to go? I don't want to get in that dogfight that it's been with other buyers. I don't want to be that person, caught in that trap. So we're just going to sit and stay. Well, hey, there's light at the end of the tunnel. You're going to start seeing more inventory options. You're going to start seeing, especially in our market where you have retirees and people either downsizing or getting out of the state of California or doing this and that, but needing to free up that equity in their home in order to purchase. And they are just getting beat left and right because of their contingencies, right? So now you're going to have a little bit more wiggle room and opportunity over the next 12, 24 months to start getting your contingent offers to stick, to land, right? So a lot of interesting things taking place. And as always, if you have questions, how's the market, whether you're looking to buy, sell, invest, give us a call. Email us info@bondreg. Drop us a DM or a PM depending on what social media platform you're on. But we're here to be a good resource for you guys. We want to educate you. We're never ones to say, hey, buy or sell. You know what you want to do. We're here to provide the roadmap and the data so you can make an educated decision and do what's best for you, for your family, and what makes the most sense for you guys. So that's what we're going to be forecasting and what we're expecting moving forward with things. As always, I appreciate you watching. Have an amazing rest of your day or evening or whenever you're watching this. Stay tuned next month for more data and more updates.